Welcome to OPA's insurance webinar. So here at OPA, we have insurance solutions for your future. So proof your life, where we examine the various insurance options available to OPA members to ensure you and your loved ones remain taken care of no matter what happens. So this evening's session is sponsored by Manulife, provider of OPA's Term 10, disability, and critical illness insurance programs. So this session will run for approximately an hour and 45 minutes. That's how long the presentation will be. And there's going to be a Q&A. A draw for the attendance prize of one of 2 massage guns will be done just before the Q&A, and the winner will be announced. So housekeeping. Questions can be entered in the Q&A box, and responses will be provided during the Q&A section. So today's presenter is Carmelina Mano. So as the National Director of Partnership and Business Development for the National Alumni Account Portfolio and the Ontario Pharmacists Association, Carmelina concentrates on successfully implementing new products and enhancing existing products. She is the primary contact for our partners on all aspects of the program and is committed to the support and success of our partnership. So Carmelina brings over 30 years experience in the insurance industry with roles from underwriting, claims, sales, retention, finance, customer service, and account management. Carmelina has been with Manulife for 11 years. Okay, so that's a little bit about Carmelina, and I'll let you take it away.
Hi, and thank you so much, Travis. Yes, so I've been with Manulife probably a little bit more than 30 years, and it's because I took a break from Manulife. I was a Manulife brat, and then I went to work for another company and came back to Manulife. I believe in the brand. I believe in the fact that we play claims, and at the end of the day, that's the most important part of insurance, right? So let me take you through today and discuss with you a little bit about our relationship with OPA that is well over 40 years old. Why insurance matters, the reason why you would want to go with an individual policy versus a group policy in this case, and then just, our various levels of protection, how to get in touch with us, how to purchase, and then we're opening it up to questions. And Travis, while we were talking, I decided we'll do 3 prizes instead of 2. So stay with us to the Q&A period, and we'll run a raffle for 3 prizes. So a little bit about Manulife. So we are a very old company, as we were established in 1887. The reality is, while we are well over hundreds of years, 150 years, the reality is our company isn't stuck there, right? So you'll notice that 84% of our purchases are online. So we're very digital savvy. We're not stuck at the old times of John A. MacDonald, who was our first president. In fact, he'd roll in his grave right now because we were one of the biggest sponsors at the Pride Parade, and that's us dancing, and everybody in the picture is a bunch of people that love, and we are all actually allies. So that's the Manulife of today, not stuck in 1887. So we are one of the top of the largest insurance companies in the world, with well over 40,000 employees, but then if you add our agents, well over 100,000. We have over 34 million customers and 1.3 trillion in assets under management. So we insure 1 in 3 Canadians today. So affinity, of course, being an OPA member, you're part of an affinity group. And so that's something that we take very serious at Manulife, is working with our various groups. And we do so with about 200 affinity group organizations. And so we'll do health, life, critical illness, travel insurance, across many professional associations and, of course, retailers. And so we have a full team that supports you. And in fact, my team, the account management team, is sort of the in-between our lawyers, our marketers, our contact centers. So if you ever have any issues, we're always here fighting on your behalf and working on your behalf. So some of the clients that we work with today, of course, Ontario Pharmacists Association, but also Engineers Canada, the Ontario Medical Association, the accountants, Lawyers Financial, and probably well over 65 universities. So for example, the universities that you would have attended are either University of Toronto or University of Waterloo. And we work with both those universities, in fact, well over 40 years as well. University of British Columbia is another example where they have a pharmacy school. So I would suggest to you that probably wherever you were educated in Canada, we've probably got you on the alumni account. So why does insurance matter? So here's our little lottery ticket. And I love using that little lottery ticket because insurance is that lottery you just don't want to win, right? Because if you win, that means that you're either sick, you're no longer with us, or something not great has happened. Now, of course, the other side of insurance is the living benefit side, and that's the stuff that we actually want you to do. Like, we want you to put in claims because you do, you get that massage or you get that physiotherapy and that sort of thing. But in this case, what we're talking about today is your critical illness, your life insurance, your office overhead, and that sort of thing. So all of these plans, we're trying to keep you well within your finance, well within part of your whole risk. And so it gives you that protection when things just don't go as planned and you win that lottery you didn't want to win, right? So at any age, you've got this coverage. The reality to it is, when you're younger and you lock in, it's probably equivalent to a coffee once a month because it's just so cheap to purchase insurance. And that's where you want to lock in. The other thing about our program, though, is that it does offer like living benefits. So you're still alive and you need a payout because you're ill. It does offer that. So it's great to have that sort of when the unexpected happens, to be able to have that coverage in place. So we already talked about the fact that it's much less expensive. It's your risk, right? So as you get older, the tendency to get sick becomes heavier. But the reality is, if you have that insurance in place, and prior to the event occurring, I know I received a phone call from one of my friends saying, "Hey, my wife was just diagnosed with cancer. Can we get insurance?" And I said, maybe you want to call back after 2 years that she's better, right? I just don't think right now is the right time for it. So you want to make sure that it happens. And especially these days that we're seeing critical illness is happening much younger. So that's why it's really super important that you're covered for that lottery, right? So our plans, most of them are medically underwritten. So the reality having a medical underwritten policy is that all the questions are asked up front. So there's not that shock at the end, right? There's companies that do their underwriting when you're putting in your claim. Well, how big is that risk, right? So you've had this policy for 20 years and then all of a sudden they say, "Oh, no, you weren't eligible." Well, that's not fair, right? So we do that stuff up front. And so as you age, the premiums increase, but only every 10 years. Because the reality to our plans, which is very different, and you can shop and check it out, but our plan, we only sell you one set of premiums. So if you purchase that T10, so term 10, every 10 years, your price goes up by your age band. So first 10 years, then after 10 years in your policy, you're going to see the next age band. So let's say you buy it at 20. And so you're in the age band of 20 to 30. So that's your price. Then let's say you renew and you automatically renew. We don't then medically underwrite you and all of that. You automatically renew. Well, then you go into the next age band, 30 to 40, 40 to 50, right? And that's it. If you look at the competition, what you'll notice is they get you in really cheap, right? So it's acquisition pricing. So we buy because, you know, a lot of us are very price competitive, and as Canadians, we're very digitally savvy, and we like to price stuff out. The problem is you have to look at the pricing not only from an acquisition rate, because then you have to look at what they renew at. I had another friend who had his insurance, since he was young. And then sure enough, he hits 50 and he had some heart problems. And then he calls me and says, Carm, you know what? I just got my renewal rate and it's ridiculous. I can't believe they're charging me this much. And I said, well, I can't help you. You got to be healthy for 6 months before you get into underwriting. But the point to that is the competition always does insurance pricing for acquisition and renewal. These renewal prices could be up to 400% more. So what happens to my friend when he's 50 and he has a heart problem is that he's stuck with that insurer at that ridiculously high price. Once he did that 6 months and then we were able to put him into underwriting, then we can bring him over and he's paying half. But the reality is that's not what you want to do. You want to be able to purchase when you're young or at any point, but get medically underwritten and stick to an insurance plan that has one set of rates. The policy rate that you got when you purchase, that's the set of rates that you want, right? Because then you know, when you look at your policy, you know, okay, so when I'm 30, I'm paying this. When I'm 40, I'm paying this. When I'm 50, I'm paying this. And when I'm 60, I'm paying that. And on it goes. Point is, no surprises. Now, this plan, you know, we've been with OPA for years, but this plan wasn't priced. It was the only pricing it ever had was in 1971. And then we redid the pricing because what we saw was that people were living longer, healthier lives, drinking less, exercising more, eating healthier. And so as a result, we were able to bring down our pricing by 15% across all age bands. So what happens with that now is that we're even more competitive on the pricing side. So not just at the renewal, but at acquisition as well. So it's a really strong program at Manulife. So I talked to you a bit about owning your own policy versus group policy. In both cases, there's, as in everything, there is some good and there's some bad. So of course, I sell you individual insurance, so I'm going to tell you how great it is on the individual side. So on the individual side, the fun thing about being part of affinity markets is that I get group prices, but I'm able to sell an insurance policy because instead of buying just one policy, it's through OPA, who has, you know, a whole network of customers. So therefore, it's priced at a group rate, but individual insurance. So you own your policy. So you are able to buy your coverage. And if you decide to leave your job or you decide not to be a pharmacist anymore, or whatever the situation is, you will always maintain your coverage. Nobody will cancel it on you. Of course, you have to pay your premium, but otherwise, you own your policy, and so therefore, nobody touches it. If your health changes, or you change your job, nothing changes with your policy. Remember, this is all guaranteed. So, and the other thing is you're able to name your beneficiary, right? So if you consider mortgage insurance and that sort of thing, the beneficiary is your bank or, your mortgage creditor, whatever. Point is, you own this policy, you assign your beneficiary, you could do so irrevocably, however you need. So therefore, you are able to use the policy for whatever you need after you go. The other thing that's important is the predictability of premiums that I discussed earlier, right? I know what I'm going to pay over the next, 60 years of having this policy, and I'm good. No scares, no shocks, nothing like that. It's very budget friendly. Okay. So our LTD plan, so long-term disability insurance for OPA members, again, it's a group insurance program for pharmacists, their family, their employees, and of course the practice itself. So it offers enhanced insurance with very competitive pricing. I mean, we haven't priced this program since the 70s, right? So it's very, very competitive. Again, it's fully underwritten. And the reason why that's important, like we said, is you don't want to hear about this at claim time. You want to make sure when you purchase and you start paying premium that you know whether you're being covered or not. So it's guaranteed renewable, and you're covered up to age 70. So your policy anniversary is July 1st. But again, we haven't changed any pricing on this since the 70s, so nothing to worry about there. And so while it is a member, remember it's a group policy, it's still your individual disability plan, right? And so as far as the LTD is concerned, your disability, so it's offered to pharmacists, and you have to be a member of the association. You have to be an employee of a pharmacist or a pharmacy technician that is member of the association. And so in order to be covered for LTD, you need to be working at least 20 hours per week on a regular full-time basis and under the age of 65, and of course, living in Canada. So what does it do for you? It protects your future income. So for example, I am sick, I am considered disabled because I'm unable to perform my job. That's really super important. And that's a big plus because there's what you call any occupation or your own occupation disability. OPA negotiated for you your own occupation. That's super essential because if you have any occupation disability insurance, then that means the insurance company could just send you back to work doing something else. With your own occupation, it has to be your actual job. And so if you win that lottery and you're unable to perform your own job, it provides a monthly benefit to help replace your income. And then therefore, your family's lifestyle isn't affected, you're taken care of during your recovery, and it doesn't affect your finances, right? Now, the reality is, if you're a pharmacist, your pharmacy can still move forward, but you have this extra sort of revenue coming in based on your long-term coverage. So it replaces approximately 80% of your income. So it does so while you're sick and unable to do your occupation, or for a pharmacy technician or an employee or of a pharmacist member. It just means the first 2 years you're unable, due to sickness or injury, to perform your regular occupation. So it's a pretty big deal, because it's not like you can be, sent back to school and work and do something completely, totally different, because that's not why you purchased your insurance. You purchased your insurance that if you're unable to do your job, then you need the coverage. So our issue ages, so acquisition, when we are able to purchase this coverage, is between the ages of 18 to 64. And so you can purchase units of $100 after the minimum of 500. And then, it goes up to 8,000. However, if you're purchasing during the ages of 60 to 64, the maximum is 2,000. But under age 60, it's 8,000. So if we consider, some premiums, so let's think about a male and a female, age 35, and the coverage is, let's say, $4,000. And it's a 30-day, elimination period, right? So the first 30 days, you're just, you're not well, and then we kick in. And COLA represents, and I'll explain in a second, because there is a slide on that in a minute. And so then if we think about the male, age 35, that would work out to $224. Okay. And that's a 30-day waiting period, which is really nothing. There are waiting periods of 180 days. There's lots of different waiting periods in the industry. So 30 days. And what that does is it differentiates for us a long-term disability versus just a regular, short-term disability. It's two different types of insurance. A female, the funny thing is it's $224.20. So interesting, you'll see in insurance typically, males and females, the insurance rates are much cheaper for females because they have a longer lifespan. Now we're seeing with, over the years, females joining the workforce, stress levels, all of that, that the gap between, life for females and males is starting to really shrink, right? So interesting in these numbers here. Our life program is a 10-year term life insurance program. Now we also have a 5-year term. So when I would use a 5-year term, it's, I'm sort of almost finished paying off my mortgage. I'm older. I don't want to spend a lot of money on that sort of 10-year guaranteed. And so therefore I would buy it's called the T to 85, right? So it's every 5 years the price goes up. The T10, however, is always fantastic. And it's actually the most sold product in Canada, because if you consider your mortgage, it goes over the lifespan of usually 27 years. So therefore, if people sign up for the T10, right, they'll use it up for the first 10, 20. So it'll go into a second, and then, probably a half a term in order to pay off their mortgage. And then they have the choice. They can bring down how much insurance they have, or, and I'm an insurance, you never say the word cancel, but yes, you should if you don't need it anymore. But the reality is, you have up to $2 million. Now, here's where Manulife's a lot of fun. We've stopped with the liquids, so, blood and other stuff, under the age of $1 million. I'm sorry, under the insured amount of $1 million. We don't ask you for that stuff. It is medically underwritten, and usually it's just a non-medical, up to $1 million. So it's easy to purchase. Like I mentioned initially, 84% of our life insurance policies are purchased online because it's just that easy. So no longer do we have, a sales guy sitting at our kitchen table trying to sell us insurance. We could actually do it. And I saw the majority of purchases on one of these bad boys last year because it's just that easy to do. So the policy is predictable. I know exactly how much I'm going to pay over the next 10 years and 10 years and 10 years. Now, the plan is, and we do at Manulife have a research team. And so what this research team is, they keep a very close eye to the industry and also keep a list of premiums across all insurers in Canada and make sure that our pricing is always better in the industry and our coverage. Now, these coverages are, are rich, right? So because it does give you, a living benefit and that sort of thing. But of course, again, remember, it's group pricing, but it's an individual policy. So you would put your beneficiary, you would choose your beneficiary, and it's an excellent financial planning tool. So again, no premium increases. Actually, in 21, we did a big 15% decrease across all age bands. Now, if you purchase more than $280,000 of insurance, then you save 10% on your total premium, right? So let's say, you're purchasing $1 million or you're purchasing 300,000, you save 10%. So already it's very affordable and well priced, but then you get that bundle savings of 10% more. So when I purchased for my first 10 years, it's based on the age I am at the time that I applied for the insurance. So of course, it's best the younger I am to purchase. Now, even if I buy when I'm older, it's still much more comparable or competitive in the industry. It's just much cheaper when you buy it when you're younger. And so they stay the same for 10 years. And as I discussed earlier, it just renews at every 10 years. But again, just based on your age bands, right? And it doesn't matter if you're sick. It doesn't matter about anything like that. It just automatically renews to the age of 85. So once your coverage is in force, it's fully guaranteed. And there is no medical examinations or health questions or anything at renewal. And nobody will ever decline in the case that your health declined. Now, of course, it's Manulife. So, of course, Manulife, we have a ton of different policies. Your policy is convertible. So let's say you say, you know what, I want a whole life policy. I want, a different policy. Well, you're able to convert it. And you could do so up until the age of 70. And there's no medical underwriting, no restrictions, no nothing. The reason why we don't have 84 different policies here available to you when you're buying, and we ask you to convert into something different, is because it's just so much easier for people. And that's why the 84% of our purchases are online. If I give you 40 different policies to purchase, you're going to get so confused. You're not going to know which one to get because there's just so, and people don't have time for that. So that's why we pick the best of the policies and we put it up and people purchase that. And that actually works out to be one of the fan favorites. And so that's why I'm glad that we picked that T10. Now, the T10 also pays you out while you're still alive, 50% or 100,000. And you're under age 83 if you have a terminal illness. So if you expect, for example, and the other thing that happens is during that time that you have that terminal illness is that we don't charge you premium at all. So, you know, the reason why we created that is because people like to plan their own goodbye parties. People like to take that trip to Italy that they didn't take with their family and their grandchildren and all their best friends and all of that. Like, there's so many things that people do when they realize that it's the end is near. And so that's what that $100,000 does for you. It affords you that opportunity, you know, to pay for stuff that's outstanding that you want to make sure is done. And so you're able to plan that out. And so when we pay it, we pay out the your final insurance. We do that, of course, after your passing. So let's figure out what your needs are. So in doing that, we have many ways of doing that, right? So on the Manulife Engine OPA website for your life insurance, we have an actual life insurance needs calculator. So it helps you, like it'll say to me, hey, so how old are you? How much money do you owe? How much do you have in the bank? Any big assets? And then based on that, it's going to tell me, hey, you know what? I think you need about $1 million of insurance, right? And it's a very honest calculation. So the funny thing is that when I go in and I try and buy insurance, it tells me I don't need insurance, you know, because of my life now. My house is paid for. I have a small insurance policy at work. I have no debt. And you know, I have some money in the bank and I own a home and a couple of vehicles. So it's telling me, hey, you don't, because the last thing you want is to be overinsured. You know, it just doesn't make sense for you to pay that money and be overinsured, right? So it also, like I said, it gives you consideration to what are your current finances? Do you have any other life insurance policies? That's what I forgot to mention to you, right? So it's all that sort of estimate on how much you actually do require. And, you know, it also asks you, do you have children, right? Do you have kids in school? Do you have kids in diapers? Like, how old are your kids, right? And what is your life milestones? Like, where are you in your life, right? So it considers all of that before it actually tells you this is how much you need. So here's a premium sort of outlook. Your age 25, 100,000 insurance for a male is $10.80. And remember, I told you about the gap. There's a little bit of a gap between female and male. And so a female is 927. So that's 25. But then if you look at, and then you've got, you know, your 35-year-old and your 45-year-old, right? Like I said, it's like 2 Starbucks coffee a month to have 100,000 of insurance, right? Now, if we go a little higher to 500,000, so $500,000, you know, people were borrowing about $1 million for their homes just because of our market. So 500,000 isn't so crazy anymore. For a male, it's $34, and for a female, it's $27. Again, that tiny bit of a gap. I mean, back in the day, when I started in underwriting, that gap was really, really big. And even at 45, you're looking at $60. So it's like, probably 7 coffees at Starbucks. Point is, when we buy coffees and we're spending sort of luxury items, the reality is this kind of coverage is so important for your personal finances to protect the ones that you love in the horrible situation where you win that lottery you just didn't want to win, right? So let's look at $1 million. When you're 25, it's, $51 if you're a female, 65 if you're a male. If you're 35, it's 68 and 53 respectively. And if you're 45, it's 117 and $90. And so that, I would say to you, is probably the average if you were purchasing in 2024 based on, how people are borrowing according to the industry, right? This is where you're at. But it's always way better, even if you have just a little, it's way better than having nothing at all. It's that peace of mind. So on to critical illness, which, I mean, a lot of you are in the medical profession. Well, you all would be in the medical profession, and just how bad this critical illness is happening, because it covers heart, cancer, and you're hearing it more and more in younger and younger people. And so there is a huge financial burden with a life-threatening illness. And so the reality is this is a living benefit, right? So you don't win that lottery of death. You continue to live. This gives you that money to continue to pay your bills while you're in the hospital, while you get out of hospital and get back on your feet, right? Because it's not like cancer is not what it was yesteryear, where it was just you were signing your death certificate. No, people are actually surviving. So critical illness is such an essential part of one's financial plan when considering that, you would receive a lump sum between 25,000 or 250,000 if you're diagnosed with one of these conditions. And there's 25 conditions to consider, right? Now, if you purchase over 125,000 of insurance, again, there's that 10% discount on the insurance. And again, these policies are medically underwritten, so you're no surprises when it comes time to claim. No surprises. Now, here's the other thing, is if you purchase this insurance and you never claimed on it, well, you're going to get 100% of your premiums back. So that is such a huge benefit, because you would have had this coverage while you're alive, and it was going to cover you if, God forbid, anything happened to you. But let's say you die, we will give your family back, or whoever your estate is, 100% of the premiums. Okay, so why is it different? Well, it's that budgeting tool, right? It's paid to me. I'm still alive. I need to use it. What is it? I'm sick. I'm in the hospital. I need to pay my bills. I want to take a vacation. You know what? After my chemo's done and all of that, I'm going to take a vacation with my family, and we're just going to say thank you to all that is good and enjoy and celebrate life, right? So that's what critical illness is there for. It's a budgeting tool. It helps you, and it helps you, while you're, getting through this critical illness, right? So So it gives you one lump sum, right? So the money's coming to you, right? Versus with life insurance, it's paid to your beneficiary, except for that 100,000 of terminal illness coverage that's embedded in your policy. And then your critical illness benefit, of course, can be paid to you to take that vacay, celebration of life party that we're celebrating the fact that I'm good, right? So this is my own personal coverage, and it's going to keep me alive and financially stable. And then if, it happens that I pass away without ever having that critical illness, then all of my premiums will be paid to my estate or my beneficiary that I choose. So let's look at a sample of premiums. So $100,000, it's $26 for a male and $25 for a female. And on we go up to age 45, 58, 76 for a male, and 59, 64 for female. And of course, everything I've shown you is non-smoker. So it's 7:41. So I think what I'll do is I'll talk to you a little bit about our travel insurance because it's such a strong program. It's always there to cover the unforeseen. And if you tire kick, as a lot of people do, look at the industry and see which one is the cheapest. And I'll tell you, well, it is the cheapest insurance out there. It's the one that you can actually rely on. Every insurance policy doesn't cover for pandemic. So let me tell you what happened during COVID when every insurance company wrote their policyholders and said, hey, it's a pandemic, you're not covered. Manulife stood out in the crowd and said, it's a pandemic, you're not covered, but we're going to cover you. And so what our president did was he said, and this was in March of 2020, when it was deemed on TV, it was deemed all over the place. This is not a covered incident. Everybody knows it's COVID, you're not covered. In fact, all of the big banks and all of the companies that sell travel insurance emailed their customers and said, you have to get home, you're not covered. So if you end up on a respirator, you're going to lose your house. I mean, these things are expensive. In the US, people were paying like $200,000 a day. It was crazy what was happening in the world. It was, people were renting cars for $3,000 a day to get home to Canada because they weren't covered, right? So they needed that help. Our president wrote an email to each of our customers, and it didn't matter where they were. Like, don't forget, this was in the middle of March break. So people purchased a week's worth of coverage to go to Cuba for a week. And they would have got the same email that the family that went to the Philippines, let's say, for a month. The same email said, wherever you are in the world, stay there. Don't move. The airports, the planes, they're just overwhelmed, and it's unsafe for you to travel. We will extend your coverage until August 31st of 2020. We want to make sure that you're safe and you're sound and you're healthy, and then you can return after that. So the point to that is know who you're covered by. Manulife is known for paying their claims. This kind of, the money we spent on COVID, on the pandemic, was a lot. But the reality behind that is that it saved a lot of lives. It saved people a lot of money. And Manulife came out, with our brand being as safe and as clean as it always was. And that is, you're covered. You are covered because you were with Manulife. So this insurance actually covers people that are traveling across Canada, right? So our Canadians if they're traveling across Canada and they purchase our insurance, they get 50% off premiums, right? Because you're different provinces, different, right? So 50% off. But if you're traveling outside of Canada, of course, it's a regular premium. And we cover different stuff, like there's the emergency medical, or there's the all-inclusive plan. And there's so many different plans. And of course, our website shows you all of those, or you can speak to one of our travel insurance advisors. You can call them. We also have coverage for visitors to Canada. So if you're not a resident, so for example, I was just at McGill a couple of weeks ago because they were bringing in all of their students, but especially their students that are international students. And so we went out to see them all. And so all the parents come. They're not from Canada. And they're all coming in and enjoying time with the their families and their kids, and getting them all set up, and they're covered. And returning Canadians. So while they're working towards getting back their old hip and everything like that, we have a coverage for them. Okay. We are working on a bigger plan. Right now you have about 12 different plans. We're working towards 16 plans. So for example, something unheard of in the industry, not very many people do it, cancel for any reason. So for example, my nails look like crap. I am not getting on a plane and hanging out with people on the beach without getting a manicure and pedicure. I don't need a doctor's note. I don't need anything. I'm good. I'm gonna go ahead and cancel my vacation, and I will get a refund. So let me tell you a little bit more about traveling Canadians. We have trip cancellation or trip interruption. Okay, so I had to cancel my trip because of different extenuating circumstances. So for example, there's a big pilot outage right now. Like there's consideration with Air Canada that the pilots might go on strike on Monday. Well, I have to go to Alberta on Wednesday. So I wouldn't have known that there was going to be that big pilot strike. So therefore I could not, if I purchase my insurance, I can then get a full refund on my flights, right? Emergency medical. I'm on my flight. I'm on my trip, and an animal bites me, a jellyfish stings me, I'm going to have, I'll give you an example. We have this one site where people are able to tell us their story and tell us how Manulife made a big difference for them. And so therefore on this site, it's really cool because, there's one lady who says, I was in Cancun, I was with my husband, and he gave me such a hard time about buying the insurance, but because it was cheap, he finally said, fine, buy the insurance. She got sick, and she got sick to the point where she needed to get to the hospital, get diagnosed. They had a translator at her bedside. They flew in her father. They flew her and her husband and her father home when she was good enough to fly. Point is, that's what this kind of coverage does. You're in unknown territory. You're stuck. You have no idea what to do. Do you call a hospital? Do you pay their prices? With Manulife, we have negotiated rates globally. So nobody could ever, rip you off, right? So, and I know there's one account it's actually Scotia Travel, and I remember one gentleman thought he purchased the insurance, he didn't, but because he put in a claim and we negotiated his rates for him, instead of paying I think the bill was $200,000. I think he ended up paying like 50,000. I know it's still big, but he didn't buy our insurance. But because we felt sorry for him, and we could see that, you know, it was very hard on him. We negotiated those rates for him. So another example, one of my colleagues left his luggage, lost his luggage, right? Well, actually, never mind my colleague. I was in November, I was in Spain, and Air Canada lost my luggage. So now I had to go to a conference. It was awful because I was just wearing like leggings. I was dressed horribly. So I had to go buy clothes. And so a few weeks ago, I went in to do, I mean, we're pretty busy. So I didn't have the time to put in this claim. I put in the claim to Air Canada to say, you owe me some money. You lost my luggage and whatever. And they declined me. So now I have to put in a claim through, this policy. Point is, that's the kind of coverage you get, because I tried to do it through Air Canada and they wouldn't cover it. So the flight and travel accident, right? So again, there's a problem, you're covered. And so you have two different types of policy. You have your single trip policy. Remember that trip to Cuba, a week, 7 days, I'm in, I'm out. My coverage is specifically these 7 days. But multi-trip, now that's pretty cool, because then you could take a trip during March break. You could take a trip when the kids graduate in June. You can take your Christmas trip, right? So you're able to, you let us know, hey, these are the days that I'm using for my multi-trip, and you're covered. Usually people that we see buying multi-trip is, people that do a lot of traveling. So for example, retirees buy a lot of multi-trip products, right? So the Visitor to Canada travel insurance program, it covers people to age of 85, and it's non-resident visitors to Canada, or of course, like I mentioned before, it's Canadians that don't have their provincial health care anymore. So we have coverages of, 15, 25, 50, or 100,000, or to 150,000 to age 85. And you can purchase for a whole year coverage at a time. So the Visitors to Canada coverage requires you to meet that sort of parents, grandparents, super visa application criteria. So it's so important. And again, what I've always said, and I've said it throughout this call today, is your insurance needs to be underwritten. There are some insurances out there that are done at time of claim. So they charge you, cheap acquisition rates, and then all of a sudden you go to claim and then you're in trouble, right? Because you're not covered. So that's why you want to be underwritten at the time of policy. Know what you're buying, right? So what am I covered for? What am I not covered for? Hey, if I like the crazy stuff, right? I like to swing from ropes and all of that. I got to be careful on what is covered under my plan, right? And then there's the pre-existing condition. So, sometimes people purchase insurance and they're very, very ill, but they're not honest about it. And unfortunately, those claims aren't covered, right? So if you've seen a doctor for 6 months before your travel for an illness, and it's not discussed in your application or your underwriting, then the unfortunate thing is that that's really not covered, right? So how do you find us? Of course, you have a website. for Manulife insurance through your OPA member website. The other thing in there is a contact us bar. So you're able to contact us and speak to agents. They're fully, they're Manulife agents that work for Manulife 100% of the time, right? Now, something else, I'm just looking at the time and it looks like I have 5 more minutes. Well, I have more than 5 minutes. I think we were supposed to go for 2 hours, but I've been doing this a long time, so we didn't need 2 hours. So our bank product is really super interesting because of the fact that we created a program as an insurance company. Remember, what we do is health and wellness. People's finances affect their health and wellness, right? So, excuse me, sorry about that. People's finances affects their health and wellness. So what we did was we created a banking solution using AI, which actually speaks to you and helps you to do all the right things to save money. So we're the 9th largest bank in Canada. So no, we're not one of the top 5, but we are a bank that is changing the look of banking. Okay, so this 285 I think is way more now, but we have 3 different bank or accounts and offers. Okay, well, actually 4. I'll tell you about the other one later. But our Advantage account, so if you consider, for example, people, other banks will let you get into the Advantage account, which is a high interest savings program at 10,000 or 5,000 versus Manulife. We want you to come in at $1,000, and I'll tell you how you're going to get there. Give me a moment. Our credit cards are infinite accounts, right? So our infinite accounts, of course, pay you, we pay you back every quarter, 3, 2, 1. So 3% for all travel, 2%, or sorry, 3% for all groceries, 2% for all travel, 1% for everything else. And here's the other thing that's really super important for you to note is that that infinite credit card, when it pays out your reward, we don't send you a check so that you go out and spend that money. Remember, we're an insurance company. Wealth equals health. So we put that towards your debt. So at my statement, it's going to show me this is how much money I owe. And then here's my reward subtracted from what I owe, and then my new total. We don't send you checks so that you go ahead and spend, or send you another card so that you go ahead and spend. We want you to pay down your debt. It's very different. Don't forget, we're an insurance company. Wealth equals health. And then finally, the best program I feel in the industry, it's how I paid off my house, believe it or not, because I was always doing traditional banking. And so, you know, I remember the interest rates went down and my husband says, you know what? This bank wants, you know, $18,000 if we want to go into the next interest rate. And it was like 4% cheaper. So we said, absolutely, it makes sense. Let's do this. Okay. But that's $18,000. But when you try to monetize it and figure it out and calculate, you realize it's actually worth it. So we're gonna lose 18 grand, but we're gonna gain it over 2 years. So let's just do it. Well, it wasn't until Manulife One came out with this product and I decided to switch to Manulife One. And what it is 4 bank accounts in one. It's a mortgage, it's a checking account, it's a line of credit, and it's a savings account. So I still have my Manulife One account. I paid off my mortgage, I think about, I don't know, 7 or 8 years ago. But still, I keep that account because it's still a line of credit. And you never know. I mean, if you ever need it, I might want to redo, part of my house, whatever it is. But it's good to have that. Now, if you sign up for a Manulife One, we do give you $1,000. But again, remember, we're not going to send you a check for $1,000. We're going to put it against your debt. So when you start your credit with us or open the account, we're going to add the $1,000 and it's going to pay down your debt. Okay. We're not sending you that check. We're going to put it against your debt. Wealth equals health. We insure 1 in 3 Canadians and we want them healthy. Now, here's that all-in banking package, which is super cool, especially for the younger pharmacists. Because what it does is, and we've decoupled the visa, because a lot of the younger folks have visas elsewhere. So we've decoupled this, okay, for OPA, members. But the reality is that this package allows you for everyday bank account, and it actually has overdraft protection, high interest savings account, and then travel disruption insurance. You're covered for all of that, right? And what's super cool, and I must admit that it does get a little bit on my nerves because my husband always, every time I go to Costco, he has alerts set up on our Manulife Bank app. So it tells him, when I'm out there and I'm spending too much money. And so I'll get a text. Did you really have to spend $650? Like, what did you buy? Right. So the point is that, this package is super savvy. And it lets you know how much you owe. And by the way, our Manulife One does the exact same thing. So it'll do stuff like, say, your artificial intelligence. Her name is Manulife Artificial Intelligence. And she'll say stuff like, hey, Carmelina, why don't you save your money this week and just go out for Taco Tuesday? And so the reason why is because we're trying to get you to save $100 in a month. And by doing that, then you get all your banking, all you can eat banking for free for that month. And you think, why do we care? Well, because then that month you would have saved $100. And if you did that for the last 12 months, you're getting free banking. And then on top of that, you end up with $1,200 in your bank. And so now all of a sudden you're eligible for a high interest savings account. Wealth equals health. We insure 1 in 3 Canadians. That's why our packages are created to help people pay down their bills. Now, on the street, if you're not able to save $100 one month and you have to pay for your banking, we charge you $8. On the street, this costs $10. But for OPA members, it's $8. Okay? So that really is it for our presentation portion. And at this point, I'd like to ask that we move to Q&A. Travis, did you want to tell me what your questions are? Or?
Yeah, technology difficulties. My apologies there. Okay,
No worries.
All right, so a couple of questions here. So this is from an anonymous attendee. So how much percent do we save for travel insurance if we are OPA members?
Yeah, good question. So, if you, I mean, I have an industry study that shows me that our rates are somewhere between 50 and 120% cheaper in the industry. If I consider like the big banks, if I consider the big insurers, we're somewhere between like when I look at the biggest bank that we have today, we're like 120% cheaper. So yeah, OPA is in good place. And so remember, so our policies are all online and stuff. So if you get a rate from somewhere else and then compare it to the rate that you get at Manulife, you'll see just how much cheaper it is.
Awesome. All right. So two other questions. So same from anonymous attendee. Number one, can I convert a T10 policy excuse me, I think what they're trying to say is, can I convert a T10 policy to a T85 policy?
So so the so the so it's exactly the same policy. Well, it's not exactly. So I mean, that would be something that I would need to get involved in, and I'd be happy to do that. I like the T10 better. It's a much better program. I would suggest to you, whoever that is. And if you want less insurance, then that's the route I would take. I would decrease how much insurance I have versus the T to 85. Just because it's just a stronger program.
Okay, great. And what is the difference between
Oh, sorry. And so
Yep, go ahead.
Travis,
Yeah.
maybe just let whoever asked the question, if they could email you or email me, we can put up my email address up, so that if they need me to get involved, I will do that so that we can move them from the T10 to T to 85.
Okay, great. So what is the difference between the acquisition rates and the renewal rates for the T10 policy?
So on the T10 policy, that's all you have is one set of rates. You don't have renewal. It's only one set of rates. The competition, you'll notice that they have two sets of rates. So they bring you in cheap so that you buy, right? And then once you're in, then they increase, you get two increases. One is your age band, and then your rates could increase up to 400%.
Right. And see the last one here. If I am currently getting Manulife insurance and benefits through my employer, is there any competitive advantage to getting it through OPA's membership?
So I need to know which insurance they have. I mean, chances are if it's the Manulife group benefits, those are big negotiated rates. So I would go with individual travel insurance. I would go with the Manulife Bank. I would go with RT10 package. But as far as, your health and dental, I would stick to my group rates, because I think that's where it's at. That's where that's what we do the best at Manulife.
Perfect. All right. Thank you for that. Those are all the questions that we have here. All right. So thanks, Carm, for answering those questions. Now we're going to move into the announcements of the prize winners. So just give me a moment. All right. So winners of the massage gun is Nazin Noorani. So congratulations, Nazrin. And I hope I get this name right. Duan Long. I think I said that right. Duan Long. And third is Azmina Remji. So congratulations to our winners. Round of applause. Very good.
Hey,
Awesome.
congratulations to you all. And thank you. I want to thank each and every one of you for taking the time out to spend, an hour and a bit with me and with our OPA team. Really, really honored to be your partner. And you have my email address. I saw that Chris put it into the comments. So please just don't be a stranger. Let us know what you need and how we can help you.
Awesome. And just to add to what Carmen was saying, thank you everybody for attending the insurance webinar. We certainly hope that you learn more about how OPA's insurance program can help future-proof your life and your family. So thanks to Carm for this evening's presentation and Manulife for sponsoring this event. Inquiries and comments can be sent to insurance@opatoday.com. Thanks, everyone.
Thank you.